Hello everyone. Before I get started, I really want to say how deeply grateful I am for all the new subscribers, for everyone who subscribed, and I hope you're really gonna like the sort of content I will be making on the channel. So let's get started. And before I do go to the charts, guys, remember nothing that you see here or anything that I've mentioned is not financial advice. You are big boys and big girls. No one will treat your money better than you will. So um, do your own due diligence. With that in mind, let's get started. Let's move to the charts. So, as you know, usually I basically look at the SPX as a measurement of the overall market. Now, it is mainly applicable to the big caps. Really, we've seen very well coordinated movement, mainly on the FANG stocks, and well, mainly the big names. So the Russell, the small caps, have basically not participated in this rally, and I do think they will be starting to pick up quite soon. But in the time being, most of the market is still following that relative pattern that I was talking about in my previous videos. I was mentioning how the market, or rather the price action, is making sort of an inverted head and shoulders. So if you remember the double bottom bear trap, that was the actual bottom of the market. We actually derived that from a fib retracement that is not this one. It's the longer period one. It's the one that I've shown that starts at 2009. But for this demonstration, I'm going to focus on the fib retracement that we have set merely on the COVID rally, because essentially the bots who are mainly in control of the vast majority of the movement do respect and recognize these levels, although they are rather anomalous, if you will. And the market will respect them, so we have to focus on them. So if you really look at where we are right now relative to the exit of the 78% on the fib retracement level, a very strong level. This is a very strong resistance, very strong support, however you want to treat it. And we just broke through. The thing is, with what you're seeing, by the way, on top, maybe I should mention this as well. This is another fib retracement that usually, because it's pointed downwards, you should be measuring it downwards. But because we're trying to measure the retracement upwards, we wanna have it upside down. Although it doesn't really matter, because these levels, the 61.80 to the 78.60, these are the levels we really care about. In reality, there is the golden pocket, which mostly refers to the 61.80% all the way to the 65%, which should be slightly higher above, somewhere around this area. So basically, this is the golden pocket right here, somewhere around the area where my mouse is right now. Um, and because we have this area coming up, because we have this resistance, we already are coming up on problematic levels. Now, if we're looking at the chart as we are right now, it is really hard to pinpoint what might be problematic. So we're looking at the monthly chart. Now we're going to start adding some tools. The first tool I'm going to add on top would be the zigzag. You guys all can find them in the indicators. Very simple, exactly as you see them right here. So the first tool we're going to add is a zigzag. Basically what it does, it takes the absolute bottom of a trend where the market flips when it has a distinct change in trend, right? Absolute bottom, then it flips. So it starts at this bottom right here, all the way to up here, and the same way on and on, right? So this is the first tool we're gonna add. This is the median lines, those maiden lines that I'm talking about quite a bit, that usually you would find them being as your center of your trend channel. Multiple times I've showed how this area had a ceiling, this area had a bottom, and this would be the center, which the price action is having the serpentine movement around, weaving around. Now the other tool is linear regression. Okay, we're gonna add linear regression. What linear regression does is a very similar thing as I was just mentioning. Basically, it takes the main channel, okay, the main trend line that where the price action is weaving around, places the relative ceiling, the relative bottom, although you do see slippage, okay, meaning the market slipping through these supports and resistances, but very often you will add and use on top of these tools that I'm showing right now a momentum indicator that will let you know whether the slippage is something you should be worried about, how deep potentially it could be. There are various momentum indicators. Some of them are a little bit more accurate and give you a little bit more in-depth understanding. Some are lesser in their quality, but the grand scheme of things, if you apply them correctly, you will be able to determine how bad these slippages will be and whether you should be running out if you are not a short seller, whether you should be just simply exiting right here and waiting for this point, or if you are a short seller, start selling. Again, you can, by the way, see here that short sellers do not make it all that great all the way downwards. There are corrections on the price action continuously. That is the normal movement of the market, basically exceeding one way than the other, and that way we end up moving and changing prices. So going back to where we are right now, if you pay close attention on the monthly, we distinctly can tell that we are on an uptrend. It's the same idea I've been talking about for quite a while, and on the grand scheme of things, this is good. This is great, right? On first glance. But then if we switch to the weekly chart, we can detect that the market still considers this weekly trend to point downwards, meaning we have not exceeded, have not broke out. In fact, we are basically creating those levels as we go. Because this tool rather is rather dumb, and it just uses the highest high that we had per period. But you can tell that we have no trend here. The one efficient thing about this is really we have no trend. But regardless of having no actual trend downwards, meaning that we broke through the trend downwards quite a while ago, that was this trend, now we broke through. The thing with this is the market will be testing these levels still and probably retracing movement into the bottom right here, maybe to the 50%. So right now we are detecting this trend is now no longer accurate or valid, and we're trying to establish a new trend. So if this one is incorrect, invalid, what do? We switch at least closer. We're trying to look, every time we're not certain, we're looking closer and closer and closer until we detect a trend that is valid, that we can rely on. So right here on the daily chart, we can already determine that the price action is starting to weave around this median line. So basically we are establishing a real trend right here. We still have this resistance, we still have this support right here, and our next level would be right here. But notice what's going on now. Now, and I assure you, this is something I've recognized, the market definitely cares about this trend, and we're slowly testing these levels. Now, as you know, the market likes, after establishing a certain high, to retest. When the market, the price action is testing a certain level, you'll often see breakages below. Okay, just like in this example, if this is our trend line, this red line, we break below, again, slippage, right? Even though we're testing a particular line. So this is often why you see slippage here on the bottom, like in this example, when we're testing these levels, you'll see slippage. So right here, because we established that this trend is rather accurate, we can determine two things that are going on. First of all, if you see the angle of the trend right here and the change right here, you can tell that we're slightly losing momentum. Now, in my opinion, what we're going to be doing now, what I've established, is we're going to be testing these levels, these highs, and we could have already tested. This is more than sufficient for the market to consider this as a test. More so, we're not testing these highs as much as we're testing these highs, these levels, the level of 78.60 on the fib retracement, right? Very strong level. In fact, I would be extremely surprised to see if we just break through once and it's all said and done. I would expect the market to retest this level multiple times. So with this wedge formation that we're getting right here, it would not be surprising at all to me if we will see rather a correction instead of to this level to the 50%, more to these levels, to this diagonal that is supporting us on the way upwards. So, like I said, even the trend up is not necessarily linear. That means we will be retesting certain levels. So, in my opinion, our next step will be breaking back down to this. So, if how do I confirm this? This is just a rather a gut feeling, if sort of determined by the lines. I know where the ceiling is, but how do I know we will be dropping? Why do I guesstimate in this instance we will be testing lower now? So on top of it, like I say, you add a momentum indicator, right? And in this instance, I will be using the quantitative estimates, which is not the perfect tool. It's not my go-to, but it's more than sufficient and efficient to explain the point that I want to make right here. So right here, we can already determine something very interesting. When there is no trend, you basically see the indicator being flat. You see no reaction when we're going down, when the trend is downwards. You will see these red bars, okay? And this sort of emphasizes how the momentum is how we're gaining momentum to a certain direction, in this instance downwards, right? So for example, right here, a smart trader would be able to exit if they had a trade right here, because remember, on the downside you have this downtrend and then you have a correction. So for example, you could have traded this area, right, these couple of bars, but how do you know you want to exit for sure? And this is not temporary, especially that if you are aware of this resistance right here, this red resistance, right? um, so how do you know we're not really moving a level above? We're really testing and we're about to break down. So here you can see the first of all, the first bar right here. So you can see how in between you're going to this sort of calmer period, and you can exit right here, right? If you think the volume will be accelerating downwards. How do you recognize that? You look deeper. If you look deeper, you'll recognize that here the volume started accelerating on the smaller time frames, and you should have probably exited, okay? But the main point being here, you can see the acceleration in this instance, or in this instance, right, to the downtrend. Same applies to the uptrend. So we can see an acceleration, and there are periods of downside. So basically, when you see this change, and if you're looking more internally, okay, zoomed in even more than we are right now, you will see this change of forces basically. So I will show, and I will give you an example very soon. So right now we're looking at where the price action is right now and what the momentum indicator is telling us. So in this instance, I'll recommend again starting from the top, starting from basically being zoomed out as far as possible. So we can tell on the bigger time frame, on the monthly trend, we are already not just calm, we are starting to build up a bullish trend, which I believe we all have felt. And this usually does not subside just by doing this little uh, knob right here, these little two knobs. We will usually have a proper wave, okay, just like in these instances, or the downside also. Um, and also remember, this action is a derivative of our sentiment. So if here we were extremely fearful, no wonder we had that. This formation is very common to see the downside being significantly smaller than the upside because the nature of the market is to go up. So this is very normal. Okay, so with this in mind, we understand that this is very weak. This is basically nothing yet, but we see it's building up. We know there's a buildup of momentum right here. But let's try to look inwards and really determine what's going on. And oh, below and behold, again, we are already mid wave, right? And you can see almost this interesting formation. I'm not gonna go in depth right now. I'll just mention. Notice how three waves, three waves. Okay, usually there are corrections, even though corrections can be very, very small intermediatory waves. But if you pay attention very, very closely, I'll use the example of this one, okay? You can see how we're gaining momentum, and you can see if you zoom out very, very, very closely how the momentum is shrinking. There's a big difference between the change between this bar and this bar and this bar. We don't even have to consider the numbers right here to tell the difference, right? So we can see the momentum is being lost right here, and below and behold, what happens right after? We lose even more momentum and more, and it becomes a downtrend, right? So these basically represent how much fuel you have left in the tank. And you can tell by the loss of momentum that you're losing fuel. So if we're looking at the current trend, on one hand, everything looks nice and dandy where we're running up, but again, remember, we're hitting this ceiling. We have the wedge I showed before, and look at this. We are slowly, here you can see consistent momentum. Of course, retest, rather weak. Of course, you could have jumped out right here, jumped back in. You could do these things. At times, I would say it's a bit risky. This is why you should consider a certain risk mitigation strategy and not necessarily always just jump in and out. That's not necessarily the best strategies. This is just for you to be able to read the market and the perception of what's going on. So in this instance, we can definitely tell that there's a big difference between gaining momentum right here, more, and lesser change. So right here, this instance already implies that we're slowly losing momentum. Let's try and look even deeper. If deeper, we can find more evidence of a slowdown. Okay, so right here, again, we see something similar. This entire structure is built out of several waves inside of it, right? So this wave was a big one, that was nice. Here, intermediatory waves, retests, and here you can tell that this wave entirely relative to this wave and this one is significantly smaller. Although this one would have been something to sort of consider, but notice again, these things usually happen. This is normal precession. But for each and every wave, where is the real point you should be sort of understanding that there is a downside? Now, I'm not necessarily saying you should be jumping in and out. I'm just letting you understand why we're going to be seeing some down action, or rather correction, pullback, call it whatever. But I don't think that's going to be the end of all things. This is going to be probably the least painful pullback we had so far. In my opinion, this pullback will bring us, in worst case scenario, to right here, around the areas of this red support. Pardon me for all the ums. I'm considering the words, so to be clear. So right here, I do believe it will take probably a couple of weeks. I don't think it will do that in a single bar, just like in this instance, it probably will take a couple of bars, maybe even 3 bars. So, well, actually, no, we're looking at the daily chart. So, 3 days, probably dwell a day or two around these levels, just like in this instance. So, you end up with a week, maybe a week and a couple of days altogether that we're going to test this level, maybe again even test this level, the 50% retracement on the downside, on the entire downside we had. So we could test this area again. It really is a bit hard to tell at this instance. Very, very much possible when these lines are still so close. It is very common for the market to have some slippage through that support and use this support as its in the community, you often hear me say "hey wall," referring to racing, where a race vehicle hits a barrier, but then keeps on going, and you see hay bales that are in the background that really are the ones to stop the vehicle from going. So this is what I refer to when I say hit the hay. So right here we could be hitting the hay at 50% retracement and starting our pullback upwards. And again, testing this 78.60% Fibonacci retracement level on the bigger trend, basically testing this wedge on and off until the market is satisfied with these levels, and we will be then exiting. But for we probably have some time before we finalize this process. I'm assuming that will take entirely could take about a couple of weeks. So I'm guesstimating the catalyst for this would be the Fed, the CPI that we will have on the 13th, if I'm not mistaken. And if we're looking at the US inflation rate year over year, right here in this chart, we can see so far we've been doing quite well. But I will tell you that this correction happened entirely mostly based on dropping energy prices, okay, which essentially ties into everything. And now that we're gonna start seeing, basically, if you really want to see, I often refer to the market having some sort of symmetry to it, and I'm not going to be surprised. It doesn't have to be completely identical, but there is some sort of symmetry. So, very similarly, how we saw right here, rather a slowdown in the increase of the CPI. So, right here, we saw a little bit of a stabilized situation right here. Okay, so and right here, I'm not going to be surprised if we're going to see something very, very, very similar to this instance. And because if you really pay close attention to the CPI reports, to the inflation rate, you realize that inflation is sort of fluctuating, and the consumer goods are still sort of high. It has to do a lot with the supply chain going back to normality, and basically ourselves and the economy still going through this restart and acceleration process, including the supply chains, including the job market. So everything all together causes it to be rather sluggish and slow. But everything hinges, as I've mentioned a couple of seconds ago or a minute ago, that it hinges on the CPI report will be coming out on the 13th. And I think it really depends on the number that we'll have, whether we will be dropping, staying flat, or going higher. Of course, it is pretty self-explanatory. If we will be going higher, the market will not be too satisfied with that. But if we go merely 1 point up, meaning we will end up at 5, so that will be rather tolerable. That means a little bit of pain, a little bit of unhappiness will justify exactly the price action on the main indices, on the majors, to stay within that wedge instead of continuing the rally. We see sort of having a slowdown. um, if we do see a decrease, for example, from a 4.9 to a 4.8, that would be great. That will give a little bit of a push to the market, but that will be very temporary. And I don't think we will see a big change altogether, which in turn will justify the Fed going on with the pause and not increasing, not increasing interest rate, not making an interest rate hike of another 25 points, and we're going to see a pause. Now, some people are looking for a pivot that is not yet, that is not coming yet. I know and I think smart enough to understand that it's not yet time for a pivot, so it will be rather a um, let's stop, hold on, see how the medicine, as they are the Fed, the doctors that they administered so much, uh, uh, so such high interest rates. Now that they will have to see whether that medicine takes effect. They cannot just observe it a single month and say, well, it's not working. So they have to observe for a period, and then they will determine whether they need to restart interest rate hikes, or they can actually pivot like most people are looking for them to do. And that is pretty much it, guys. Again, I just want to thank all the new subscribers. I'm absolutely grateful for every single one of you subscribing, and I hope you like the sort of info and knowledge I'm bringing. And I will be making more videos. I will be trying to be a little bit more consistent with the videos I'm making in terms of quantity. And more so, if you guys will be attentive in the next couple of days, I will be making a video on a stock called EPD. It's currently being very much observed by our community. We are quite interested in it for various reasons, and I will be making technical analysis on that stock. So, with that in mind, guys, before I drop off, I would tremendously appreciate it if you drop a like, make a comment. If you agree, disagree, it doesn't matter. If you know, press the bell, subscribe, obviously. I'm trying to build up this community of people who are interested in technicals. You don't have to be, a university professor to understand these things. It just takes a little bit of time and dedication, and you will be able to understand very well where are certain bottoms at certain times, where are certain highs, where you should be buying in, selling, or at least not panicking, and understanding why something is happening in the market. So, guys, with that in mind, tremendously appreciate every single one of you. Like I said, have a wonderful rest of the week. Bye bye.